And good morning. Welcome back. Welcome back to me. I don't really have anything to say right now for an intro, so here we go. All right, guys, let's do it. So I got a super chat here from Señor Muchacho Sean Cowchow. Heck's about to explode. Cannabis, not a pump and dump, no FUD. I'm a dispensary owner. Okay, I can look at it in a little bit. Absolutely. But let's see. Futures are down, of course. So the Fed is doing their thing. I guess the Fed's going to talk today. Jerome Powell's going to give a speech of confidence, in my opinion. Try to calm everything down. We have debt ceiling issues that are coming to fruition. That will likely be raised. I think this number's correct. I was reading a story this morning. I can't remember. I didn't write it down. Since 1960, I think they've raised the debt ceiling 38 times. I'm pretty sure that is the right number, but I'm assuming. I mean, the debt ceiling is going to get raised. We're going to do a couple of stories on it this morning, but right now futures are down. The NASDAQ's getting hit pretty hard. So somebody asked the question, why do tech stocks get hit so badly when interest rates get spiked a little bit? And the reason is tech companies borrow a lot of money. And anytime that there's an increase in rates, they look at it as their growth is going to slow because they can't borrow as much or it's going to cost more to pay back their debt, especially if it's at variable rates. So that's one reason that I don't like seeing this, that the tech stocks are really moving this market, because tech shouldn't be leading markets. Materials should be. Things that move the country and move the globe should be, not just tech. But you're always going to have issues where when interest rates go up, those who borrow the most money are going to see the biggest hit. And that's what you're seeing. So to answer your question, that was the reason. Oh man, there's a lot of talk about weed in here and stuff. Best intro ever. Yeah, words weren't really my thing this morning. Okay, let's get into the debt ceiling talk. Where are we? Debt ceiling. What happens if the United States defaults on its debt? Well, I'll tell you what. Everything would break. That's exactly what would happen. Literally everything would break because we are seeing numbers that we're in an unprecedented area of debt that has never been seen in the history of the world. Not only the history of the country, the history of the world. So let's see. The computers would break. I literally think the computers would just shut down. This is like what everybody thought on Y2K, except it might actually happen. But September 30th marks the end of the federal government's fiscal year, the deadline for Congress to pass a measure. The debt ceiling, which is the total amount of money that lawmakers are authorized the Treasury Department to borrow, may be suspended or raised by mid-October, and the United States will default on its debt. It means we can't pay our bills. So, like I said, I think the number's 38 times since 1960. The debt level has been increased. I'm sure it's going to happen again. It's just the typical going back and forth between Republicans and Democrats, and of course they're going to settle on something. The last time the government shut down, I think, was 2018. My point is, if you're going to just spend absurdly like this, shouldn't you? And the only way to stop incredible spending is to shut down the government. Okay, fine with that, I guess. So they're going to close some parks. I see it as an exceedingly slim chance, although the theatrics with the possibility is ramped up. So it's just a dog and pony show. Barclays says that their best guess. No one knows when the United States is going to run out of money. And guys, I'm saying this. They're going to raise. We're not going to default on our debt, at least not this time around. So I'm reading this story, and these are all just speculations. I don't believe that it's going to happen. The Barclays' best guess for the date that it will run out of money is October 29th. Total projection. Nobody can guess when that happens. The idea is the idea is that the U.S. remains so incongruous that the reaction in the financial markets isn't only unknown, it would raise big questions about the infrastructure of the system. So here's some interesting stuff right here. The Securities Industry and Financial Markets Association. Two possible scenarios. The Treasury Department knows that it will miss its payments, so it will ideally announce at least a day in advance, and then the maturity of those bonds would just keep trickling down the road. So it would really just be delaying the inevitable. Second situation is there is no warning, and it just happens, and then we just see what happens. So right now, game of chicken between Congress, and that's that. So Mo, stop being so pessimistic. All right, wow. I don't know if you're joking or being serious, but I will not address that. NASDAQ. So here's your thing about the NASDAQ. So the NASDAQ gets hit when yields spike. Tech companies have borrowed a lot of money, and honestly, tech companies have borrowed a lot of money to grow their stock prices, not to grow their businesses, to grow their stock prices, which is a huge reason why I am not a big fan of the stock buybacks that they're doing, using debt to grow the stock price. They should be investing that borrowed money into growing their businesses and growing their plants and creating more jobs, etc. But instead, what they're doing is using it to buy stocks back. And I just think that, stock buybacks until the 1980s, stock buybacks were illegal. It was seen as a form of market manipulation. And if you don't believe me, go look. Stock buybacks were illegal. So that just tells you all you need to know. And that was only 30 years ago, 40 years ago, whatever it is. So the NASDAQ futures dropped by 1.5% this morning as the bond yields start to climb. So the 10-year Treasury continued its speedy climb on Tuesday. It was just 1.1%, 1.13% in August, and now it's at over 1.5%. And if it gets over 2, that 2 is going to be a very mentally, psychologically challenging number to a lot of people, that 2% number. Tech shares were dropping pre-market trading as rapid rise in rates makes future cash flows less valuable and in turn makes the popular stocks appear overvalued. When you see declines like this in futures, it typically means that a multi-billion-dollar fund is getting out ahead of what they think will happen with a 3 or 4% move down in tech stocks, and that's what Kramer said. I mean, he's probably right. It is probably just a lot of selling from one person, or one fund, I should say. And keep a watch on oils and whatnot. Do I want to read this for you? Traders will be... Oh, Jerome Powell speaks Tuesday. This is the rest of the BS that he always says. So let's go to the next one. Fed. Do I want a Fed shakeup? Yeah, let's do the Fed shakeup. So, guys, the Fed shakeup is interesting. There's 2 Fed presidents, Rosenberg and Kaplan, that are going to be retiring from the Fed because of what they were doing as far as trading securities. and they faced a lot of backlash. So are we seeing something different from the Fed? This is going to be very interesting, but the Dallas and Boston Fed have stepped down from their posts. Kaplan's going to retire on October 8th for the distraction. And then this one's adorable. Eric Rosenberg says that he plans to retire at the end of September, citing a health condition. I don't know who you're fooling, but you didn't fool me. And I'm pretty sure you didn't fool the 400 people watching this. By the way, smash the like button for me. All right, free spending. This is another good one. Free spending consumers defy economy's unholy trinity on the morning brief. Who wrote this? Javier David. Okay, so consumer spending is still... We did a story about this like 2 weeks ago. Consumer spending's high. It is very high. U.S. households are flush with cash and still track 45% higher than the 20-year average of personal savings rate. People have a lot of money now, and if they had $1,500 before, now they're maybe spending $2,000. We're also spending a lot of money on items that we can't have because of delays in shipping issues and supply chain issues, etc. For companies like Costco and Home Depot are to rent their own container ships in order to insulate themselves from worsening supply bottlenecks because they can't even use all of their own. There's tons of ships just stuck out on the water and they can't make deliveries. Rising prices are forcing some consumers to cancel Christmas. That just reminds me of when Michael Scott says Christmas is canceled and Stanley says you can't cancel a holiday. From an inflation perspective, continued drawdowns on the auto inventories this fall, coupled with shortages of electronics, furniture, and other consumer products, argue for upward pressure on core. All right. This story's boring me. Okay, let's see. Where did I want to go next? Ford. This is a big one, guys. Ford is going to build an $11.4 billion campus for electric car production. So when we talk about all of these different things going through, say, NIO and Nikola and this and that, Tesla's the only credible EV company that I see. But if somebody like this puts $11 billion into a company and they are Ford, I think that something's going to happen. The challenge I have with Ford is the charging system that goes along with that. And I talked about that last week from Marquez Brownlee's little road trip that he took. But they're going to put $11.4 billion into Tennessee and Kentucky. This blue oval is going to be the campus. There's no expected date when it's going to be done. 6,000 jobs are going to be created, but they did say that they expect 40 to 50% of their global vehicle volume to be fully electric by 2030. That's very ambitious, but hey, it could happen. Let me talk about oil real quick. Day traders, you're going to love this. I told you I think oil is going to go up in the winter due to the cold weather. It's at $80, over $80 a barrel. I don't know what it's at this very moment, but keep a watch on it, guys. And the last thing, somebody sent this to me in the Discord. A hamster has been trading cryptocurrencies in a cage rig to automatically buy and sell tokens since June, and it's currently outperforming the S&P 500. So this is the little box. You put the little guy in there. There's a sell tunnel. There's a buy tunnel. There's a wheel. There's a camera to watch the little guy. Let's see here. So the live-streamed hamster named Mr. Gox has independently been trading a portfolio of various cryptocurrencies since June 12th. So far, it's outperforming the S&P by an impressive amount. As of Friday, the portfolio was up nearly 24% according to the Twitter feed, along with every trade the hamster makes. So if you want to go read this story, it's incredible. The hamster is doing well. And look at this little thing. So we have S&P here, the disruption, ARK Innovation here. The hamster is beating Bitcoin, NASDAQ, S&P, ARK, Berkshire, and the bank. So in my opinion, I think hamsters are disruptive and all of you should go to the pet store right now. So go, if you're watching me on a desktop, pull me up on your phone and put your AirPods in and tell your wife that you have to go to the store. Tell her you're going to get like some milk or something, because I think a lot of people would be really pissed if somebody came home with a hamster. So just stream me on the way to the hamster store and get some, and then come home and you will be filthy, filthy, filthy rich by the end of this year, because Bitcoin is going to $6.2 billion a coin and a hamster can probably get it to 6.3. So that's it for today about the news. Let's move on. The yields. Look at that 10-year. That 10-year is ticking up. 1.54% is what it was at last night. So that thing is ticking up. The 3-month is doing nothing. What kind of earnings do we have this week? So we have Micron today after the bell. What else do we have? What do we have tomorrow? Oh my God, Palantir is tomorrow morning. Everybody, make sure you wake up at 2 a.m. to follow Palantir in the morning. Bed Bath & Beyond reports before the bell on Thursday. And CarMax. That's a cool company. Okay. Guys, it's getting to the end of the month. Prices are going up, I'm telling you. If you want to join the Discord, $7 gets you that. There's 6,100, 6,200, something like that in the Discord. Guys, it's a great community. If you want the software and Discord, $27 a month gets you that. This is going to $28. If you want to join the Bid and Ask, that's with me, trading. $77 a month gets you exclusive Discord chats, employed trader series, etc. If you want to do the monthly super shorts, $500 a month gets you into the Paul's super shorts. And if you want to do a one-on-one trading session with me, $750, 1 hour of my time, Zoom call. It is very beneficial, guys, especially if you're really getting serious about trading or options or what have you. And if you want to do a real estate deal with Paul, $10,000 for 4 hours of his time will get you that. And if you're doing a deal in this market, it's something that you probably want to consult with an expert with. So that is that. Smash the like button. Give me some stocks. We'll start rolling with them. And I'm going to start flipping through your comments here. Mr. Gox. That is such a great name, Mr. Gox. The Mach-E is impressive. So Das, the Mach-E is impressive, but the issue is the charging system of Electrify America and the other one, I can't remember the name of it, ChargePoint, suck. That's the problem. Let's see here. Poncho. Oh, we can also put Poncho in a cage. That would be disruptive, but that might be considered animal abuse. Nike. Let's see what Nike's doing. Nike. So Nike's an interesting one because there's two gaps on Nike. Can I zoom in on this? So the gap is real on Nike. So you have this gap. Wait a second. You have this gap here, and then you have the gap that was created there. So you're kind of in a gap sandwich. Which way are you going to go? This is where you're going to have to trust your stochastics. Run this thing down, probably to the 200-day moving average. It's all going to open the day at $147.17. Excuse me, and you're going to do very well. But I think as soon as you get to that 200, I don't think you're going to make a move any further down here. I think what's going to happen is you're going to make the move down to the 200, right to here, and then the stock price is going to run back up. You're going to fill this gap, and then in the future, you will come down and fill this gap down here. So whatever you like. Okay. I made the switch to off of Patreon to pay directly. Thank you, sir. I think it will benefit you as well. All right, CLF, they're another gap down. I've heard some stuff about this company I probably shouldn't say, but I won't say it. But from a trading perspective, yeah, this is looking good. I'm sure you're going to make a move up to the 100-day moving average, and you'll probably kind of run out of gas up there. I can't really see this thing going to all-time highs unless it has something to do with iron pellets. CCL. So CCL reported earnings, did they not? I think they did. What wasn't this the earnings date? Earnings date of September 24th. Today's the 28th. Great looking volume coming in, but I do not like that big wick that it has going for it. So why don't we zoom out just a little bit here? Okay, what is this? Give me 1 second. Let me just do 1 year. No, let's do 5. Oh my God. 1 year. So this is you are in the 60s up here on this side, but the chart is glitching right now. So this is kind of your halfway point. You have a lot more chart up here. It's just been a complete fall. So when you do get up to this 32 area, you're going to struggle to get through, and you're already seeing the resistance coming in here. Your daily's about to roll over. Weekly's looking good, but you're running out of steam. This is a pull. This is a definite flag pull. You've run up. It's gonna fall back down. I'm telling you. Let me pull up a line chart real quick just to confirm Yeah, this is a very big flagpole pattern. Here's your flag. For sure going to come right back down, and I guarantee it's going to come down just above $24, which equates to the 200-day moving average. And there you go. All right, let's see. Let's get my candles back up here. What else you guys got? What else? Let's see here. CLF, TPL, City, Cat Swing. Cat is reserved for the Employed Trader series. ZX, what is that? EXAS? EXAS. What is this? Exact Science Corporation. What do we got going on here? 1 year, 5 year, 6 month. Okay, so this thing's been beaten down for real. I'm noticing that it had a gap as of recently. The trend is looking really bad for you. This trend is, I mean, even you're going back many, many months and you are just in a downtrend. You can't break over 32% down on the I mean, ignore this thing. Move on, find something else. I think that you're putting yourself in a position to just, I look at these things. There's so much. There's so many stocks out there. Why would you even bother? Why are you giving yourself a headache when you can go trade something with so much more ease than driving yourself crazy? Suresh, let's see. Oh, Just Eat Takeaway. So I've heard about this. I've heard about this company. Let's see here. And thank you for the donation. We'll pick the donation later this afternoon, and your donation will go to the correct place. So what do we got here? So I'm going to look at a 6-month chart. I want to look at the day. Oh my goodness gracious. Give me a second here. Day. What is going on? Okay, so this thing is just really, really, really getting beaten down. So you're holding some sort of resistance point here, or support point here. So that's what you have that's going well for you, Suresh. The bad news is this thing's falling like a I don't know, like a boomerang. Boomerangs fall, right? This thing is just coming straight down really, really hard. And the volume isn't even that great on it. So that just means that there's just only selling volume that's happening right now. I don't know what this is, but it's only selling volume. So what if I was you, I would let this thing cool down. Let this thing just coast on the bottom. As soon as it starts turning up like it did back here and it did back here, then I would go ahead and enter that thing. But for now, I would just chill. Don't get into something this crazy. There's really no point, and you'll be all right. Next, let's look at Fox. I haven't looked at Fox in a long time. Oh, do we have something going on here? Let's see. Yeah, so this is a flagpole pattern too. I don't know what's going on with Fox Corporation, but it's just here's your flagpole pattern, and this thing's going to come right back down. It's going to come right back down just above $35. And if you look over here, 35.15 is your 200-day moving average, and it's as easy as that. There you go. So take your profits if you're in it. Please take your profits. Do not stay in this thing any longer than you need to. Eric Liu, Space. Let's see what we got for Space. So Space was disruptive, and then they went to Space, and then they came right back down to reality. So that sucks. Anyways, it's just consolidating, going sideways. You're really tethered below 4 major moving averages, even on your daily. I mean, look at your daily. It's such a cluster F. It just doesn't work. You're supposed to be able to see this. Let me use blue. You're supposed to be able to see up. Okay, that's not blue. You're supposed to be able to see up. My goodness. Up, down, up, down, up, down. This is just, it's a cluster. So chill out with this one. If you want to do something, you can do it over here on a daily, but to be honest with you, I'd rather just go and day trade this. I would never look at this thing on a daily chart or a weekly chart. I would only day trade this stock. GTNX. Thank you, Snave. Falling down like a gold digger. That's a good one. What is this GTNX? Am I reading it right? GTNX? I don't think I have it, man. GTNX. Make sure that ticker's right. LPX. Let's see what LPX is doing. LPX. Okay, this thing's looking solid. This is a good looking stock. What I would like to see is a little bit more of this I want to see a little bit more a little more separation between the red and the yellow line, but it's starting to look good. I mean, one good positive buying volume day would get this thing moving. Now, yeah, the volume is fine. Hey, if you get an engulfing candlestick like that, go for it. I bet you'll start to get that separation that I just spoke of. You're even looking really good on the daily. Just know you're going to face some resistance here. You're also going to face some resistance here. And when you get up to these all-time high areas, or I shouldn't say all-time high. I don't know if they're all-time high. These previous high areas, go ahead and take your profits. And don't fight with Daddy Fed. Okay, TBT. Throwback Tuesday. I don't actually think that's what the saying is. ProShares Layman 20-year Treasury. So I will say this right off the rip. I don't like seeing all these gaps all over the place. This is something that I would not really want to be in long term, just because I would want to see more consistency. This to me looks like you're trading gold or some kind of commodity where you just get bounce, 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 gap up, gap down, and it's for no other reason than it's supposed to do that. But to me, I wouldn't do it. If you want to do a very long-term play, you can, but this isn't my thing. What do we got? Nah, don't even do it that way. Guys, smash the like button for me. That would be great. GNTX. There we go. All right, so let's pull up a line. I want to see what we got. All right, so we have another flagpole pattern, and this is a good example. Here, let me show you guys. This is perfect. Glad you said this one. All right, here's flagpoles. So this stock price ran up straight up here, and it came all the way back down. And the reason is you need to see lines that look like this. You want to see what I call W formations, where the stock price runs up, pulls back, creates a support level. Runs up, pulls back, creates a support level. Runs up, pulls back, creates a support level. This time, this thing would probably not pull back any lower than this or this. It would not drop back down here in the immediate future, just because you've created these support levels. So if you look at any time there's a flagpole pattern, this one, run up, flagpole, come right back down. Let's see here. This one, starting here, run up, flagpole created, comes right back down, and then it went even lower. Right now, you've created a flagpole. This thing's going to come right back down. And if you notice, if you're very experienced, you notice here's a high. This is a lower high. See? Lower high, lower high, lower high, lower high, lower high, lower high. This is going to probably be a lower high. So this is a definition of, and if you look at the pattern, it's just a complete downtrend over the past 9 months. It's as easy as that, guys. That's all. What I did is just basic pattern recognition. That's all that is. It's just picking up patterns and noticing them. And flagpole patterns were a big part of this stock. So to me, I would not even trust this trend right now. This thing is going to flagpole out and it's going to pull right back down. So if you're in this thing, please take your profits off the table, and you're going to be better off than people watching Stock Mo trade on a 15-minute chart. Nike short, I already did that one, but I'll do it again. Let's see here. Nike short, yeah. I mean, have at it if you want. I said I think you're gonna run out of gas at $145.30. So if you want to do it, have at it, but be careful. ATVI. Let's see, ATVI. Guys, get the likes to 200. That would be great. That would be great. Okay. Activision Blizzard. What do we got going on here with Activision? So I really like the trend that's being created down here. I wonder if I can zoom in on that a little bit. Let's zoom in here. So that's really nice. Now, let's pay attention to something. Remember, this is pattern recognition. Look at the last time it tried to get up and start moving. It took several days for this thing to get going and make this trend right here. Again, same thing. Look at this disaster that's happening down here. I like to see, when I look at these things, I like to see up, down, up, down, up, down. I don't like to see this mess of 20 to 25 days in a row that it takes to get the stock going. So this is making me say, I want to be conscientious here, that this could just run up and pull right back down. The big issue that you have, this whole cluster had to do with the 25-day moving average. You hit the 25-day bounce down, 25-day bounce down, 25-day bounce, and you just kept hitting that 25-day, even going back to the beginning of August, 25-day move down. And Then you got below the 200, and it was just the end of the world for you. So be careful with that one. Okay, ZM. I would be happy to look at ZM. I don't know what that is. Oh, I need my cowbell. Disruption alert. Video conferencing just came out during the pandemic. I had never heard of it before, but this is a disruptive company. That's all I know. So big gap down, very big gap down. And the trend is still very, very much against you. If you want to short this thing, go ahead and short it. It is no problem whatsoever. Give me 1 second. Still on show. Okay. Let's see here. And Bank of America. Is that okay? I thought that was Horace again. I was gonna say Horace loves these banks. Bank of America flagpole. That's all it is. It's just, let's pull up the line. Just show you guys. Straight up, it's gonna come straight back down. I'm telling you, it's a flagpole. That's all you need to know about that one. Zooms. Oh, is this Zoomies? Zoomies? Yeah, I went there yesterday. Well, I didn't go in, but good looking trend starting, Peaker. Very good looking trend starting. You're just facing a lot of resistance here, and if you just correlate this, I just pointed to my screen like you can see me pointing at my screen. If you can correlate this with over here, you're right at the 100-day and 200-day moving average. So you get through that, you Gucci. Just be patient with it. Next. Dun, 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 dun. I will do 2 more, and then I'm going to get out of here. Microsoft, that's what you want? Microsoft, MSFT. Ooh, man, Microsoft was the bee's knees up here at $310 or whatever it got to, $308. Opening this, it's going to open the day at 200 and call it $90. So keep a watch on your trend. If you're in this thing, consider taking profits. But big downtrend, lots of selling volume coming in over the last couple days. Watch for this thing to drop down there and below the 80% line and go from there. Let's do the very last one. Don, net short. Don wins. Don, I like this one. This is looking really good. You know what I'm going to say, though? I'm going to say let this thing calm down. We've had a gap. Let's let this thing calm down this morning. It's going to move down to the 100-day moving average. You're getting a lot of selling volume, but you still have a positive uptrend. So let's just, this was very drastic. So be careful. Don, you know what? I think that you should go and day trade this thing short, and I think you will do very well with it. So, all right, guys, that's it for today. Live stream, 2 p.m. I will see you all there, and go have a wonderful day. See ya.